All right, good morning. Those are in green room, I titled YouTube, can you hear the screams yet? You can hear the screams. Hopefully it's not from within your house or you. You're getting closer to the low. I'm putting them up. I'm getting them. All right. So markets are going lower. And every time we see these intraday rally attempts that fail, it just adds a little bit more fuel onto the fire that's going on. Pops up there and gets knocked right back down again. And at some point, as probably I assume as we get down into this area, one of these will hold on to the gain and we'll see at least a stabilization day. So what we want to see is, well, could happen a couple of ways. The ideal way would be if this just, drops down and we get a bottoming tail bar. It's a godsend. Well, if you're bearish, at the moment, Tony, that you see the intraday rally and you're short, two thoughts appear, right? Depending on the position you're in. If you're short, you're like, oh, damn, here it comes. They're going to rip the shorts' heads off. And the other side of it is, okay, here's another shorting opportunity. To hit those stocks, markets that are in a downtrend at resistance once they roll over. And so we'd love to see some type of climactic move to the downside. Well, we see how the bars form after the fact, right? At the end of the day. The point is, in the middle of the day, and in the middle of the day, what we have is, bars that look like this. And so it's a green bar, as we see here, right? And here, a green bar doesn't mean prices are going to go up, right? They might go up as it makes a counter trend move. And then, it rolls back over again. That's normal, within a bear trend. And then it goes back down again. So it just, buyers come in, they think it's low enough and they push it back up and shorts cover and it comes up to resistance and it rolls back over again. But ideally what we want to see to end, maybe end isn't totally the right word because I don't think it's going to end this corrective phase. But what we want to see are bars that do this. Maybe they stall and then, ideally you get a big fat wide range bar that looks like the world's coming to an end. When it happens, somewhere, anywhere there's green boxes, right? So this attempt to rally that failed, turned into a topping tail bar, gives us another insight that sellers are still in control. They want to sell at slightly higher prices. So over here, shorts are more timid, they're look to get out of the way quickly. There's still memories of, what was going on here. You're short, you're getting destroyed. And now as chart readers, we begin to gather more information. And of course, at the beginning of the move down, we're not so sure that is impossible to have a big rally, even in a downtrend that could have went a bit higher. And then we see, what happened there last week where it gets crushed. And it's like these institutions, whether they are manipulating this, because you remember intraday, this looked like a monster bull market rally. And then the next day went all the way down. And we talked about the void and being the weakest link and all of that. And it fell all the way down. So now, rather than daily rallies or 2 days, small rallies and failing, where there are intraday rallies that are failing. And that tells us that sellers are becoming more confident and more aggressive. And what we want to see is like today, tomorrow, those intraday rallies turn into intraday consolidations and drops, meaning it sits there, it has a drop, and it just sits there and it can't rally back up. Fear comes in to the markets where it's like, hey, this thing, I just got to get out here. It's just too painful. It can't rally. If it does have a little tail, it turns into a rally. It turns into a topping tail on one bar. This could be a 15-minute chart. And then later in the day, it drops again into the close. And then the next day, just waterfall to the downside into support, wide range bar. And that's where you get the climactic volume spike at support. Everybody is selling and, it exhausts itself. And that's historically the kind of pattern that happens and what we want to see. In other words, no more consolidations, no more big green bars, just get me out at whatever price is available, hit the bid, because now it's really a bear market, right? And so get the hell out of the way. This is going to go down, and then it starts some kind of bounce. And so one of the things I mentioned in the video last night posted on YouTube there was it's more likely, let's say we do get this move to the downside and into this area, is that it'll take a little time, to do a little of this back and forth. And, now sellers beginning to lose confidence. What does sellers beginning to lose confidence look like, right? We're pattern traders. So you get this and you get a bounce, and then it comes down again and either tests, maybe it breaks the low slightly. And now everybody's like, oh, so there's two ways of shorting, right? You short the rally, you short the continuation pattern, and others that they just short on the break of a low. Right? We don't do that type of, move after it breaks the low, but it can work with a big stop. And then when that happens, it comes right back up again, and it looks like a head and shoulders bottom. It might look like, if it's more violent, like a downside shakeout. In any event, over a period of time, it builds a new support area. So you've got this support area. Right? Now it builds a current support area within what we want to see as being a void. And then we see where it goes. Okay. We'll just have to see how this all unfolds over time. But now, rather than getting things moving to the upside like these 2 days, traders of institutions becoming more convinced that their theoretical secular bull market is beginning to wobble on its legs, and this does not looking so good. And Mr. Powell was full of BS, and maybe it's not going to be such a soft landing, and all of the worries that were rationalized start to become a view of this is reality of what it is, and you just better sell. So we look at patterns, and then there's the psychology behind the patterns. All right, spiders down here at it's called 388-ish, 388. So gapping down a decent amount. Now, you say, is that an exhaustion gap? Well, I would say no. First of all, it's not a monster gap. And you had 3 days here. And look at the arrangement of these bars. Now, if yesterday, remember, it was, the bad news, and it rallied back up here. If this was a green bar, our bias was that above that, we would think long, even against the downtrend. But now you've got 2 bars of stabilization, and it failed, and it closed below it. It's bearish. Now, what would change our mind? A big green bar today, closing at the high of that bar. Well, it don't look like that's happening at the moment. So as we always do, we'll just see how this unfolds. Right now, it looks like it's going to come down somewhere into here. All right. And Qs, they led the way down. They're still going down. Here's a support area there. Look to the left. This is where there's a big chunk of overlapping bars. Now they're overlapping bars. They're not a pivot low like this or like this, where it spiked down and spiked back up again and spent some time. So it's a relatively wide area. So we mark it as an area rather than a more exact point. So whether it stops, I don't know, 11,000, so sounds like a good number. Somewhere in between, we'll look for some pattern that forms. It'll guide us. By the way, yesterday, surprisingly, well, maybe not so much because, buyers stepped up immediately, but I really thought this number would be a lot lower. It's still relatively low. And I really want to see what should happen today, that these option traders really, I want to see them bet on a crash. Historically, that's what we want to see. Crash internal numbers. Qs are handy. Well, we know it's below 300. And that wasn't good. We knew that there was a big bearish option trades there. And so that same story, we got this big, wide, whippy mess there. So I'm kind of thinking, 280, we could look and see what kind of open interest there is at 280 over the next, I don't know about today or tomorrow, probably have to go into next week. See, let's see here. 280, 11,000. I don't have they clear out the bid and the ask a few minutes, 20 minutes before the open on e-signal. I have to go look at IB, but open interest will be there. 4 days out, 280. Not that big. May 20th, May 18, May 20th. Let's see, 280, 61,000. Yeah, let's see it. So I think, just looking at this area and just spitballing around the middle of it and a whole number, I would say that would be a good, reasonable area for things to turn around. And even if it pokes below here a little bit, it's okay. Poke below there a little bit just to scare the daylights out of a bunch of option traders and market makers is just fine. And poke it back up again. But ideally, it just gets slammed to the downside. All right, let me continue here. So hand it over to Dan. We didn't look at YM, but it's going to be the same story. Topping tail, failed rally attempts, 30,000 down here. Got a cluster of, same consolidation in that area. I hope it breaks 30,000, only to see the media, go a little crazy. And I'm just waiting for somebody some guy with very experienced fingers to go up to the drawing board and show me some trend lines that maybe going back to who knows when, the bottom in 2001, there's some trend line coming up off of the low that's going to predict the low. Yeah. Where all those guys with their trend lines over here? When they just going to look to the left, they wouldn't, what would they talk about if they really just focused on what's real? Oil slopping around back and forth, but holding up. And 100's still there. So what does that mean, McGraw, that they're holding on to those 300 puts? That, well, they're in the money, so they're making money. Right? Why should they sell them? Except when do they expire? Are they expiring on the 20th or tomorrow? Oil popping up here. Silver. I don't know. Poke below the low. And so greater than 100% retracement. Maybe this begins to turn, but look at this. Look at this. Why is it going down? Look at the euro. That's in a bear market. It just keeps getting killed. Now, you've got the euro coming down to this low, right? And it'll start to make a turn, I think, as well as look at the 10-year. Remember, we talked about this a couple of weeks ago. right? The 10 years backing off, but it reached this high up here. So I don't know if it'll maybe poke back up again, but what we have beginning to happen here is to some extent, there's been some improvement in these yield curves. So you can see the shorter versus some of the longer, or the intermediate versus the longer, have improved from being inverted. So there's the beginnings of some somewhat positive things going on here. So, but the markets are heading down to where they need to go. So maybe, think we'll look back on this and we'll say, well, here were the improvements that were beginning to happen, and the markets accelerated, and then we'll see the turn, and we'll see those market internal gauges just showing, pure hysteria and fear, and we'll get the low. All right. So same story here. Russell is, in a free fall, heading down there. Same intraday bounces. Bitcoin getting killed. It was down more, bouncing a little bit, but below 30,000 now. I was talking to a fella, one of the contractors here, and he says he's loaded up on it. And he says, I don't care what it does. He says, if it hits 20,000, he says, I'm going to buy $500,000 of it. So I don't care what it does. I'm buying more. He's already sucking wind. He's just going to keep loading up and averaging down. We shall see. Silver, gold, holding at the 200, and we'll see if the transports, if they, they started joining the party here. They've broken here. Now look at the, see, this hasn't broken yet. This is 20 stocks. This is like 50 stocks. So you got to be, you're looking at the ETF versus, the trans there. This is already broken down because of the other stocks that are in it. Anyway, all to you, Dan.
Good morning. Yep, we've been bearish here, waiting for signs of a tradable bounce. I just told Greg pre-market, I said, this would be a great time. We're going to do a MT live on how to trade bear market bounces. So I just suggested a couple stops on shorts. We've been in for a while. We've had beautiful shorts here. We also actually have a how to short MT live coming up soon. All right, so all our positions are fine except Tesla. We started with a condor yesterday. We took our profits on the call side. We did the 690s below this big old bar. We have 2 days to go. It's against us, obviously. We'll keep an eye on that. The other opens are fine. Just ask if you have any questions. We had a FedEx one, which I had moved stuff to break even. There's not as many earnings today. I went through and scaled them out already, but there's a couple big old gappers of interest. Hey, Greg, remember I asked you, I said I was shocked there's not an ETF for FANGs. I just saw this one going by the ticker today. It's an inverse levered FANG, FNGB. So there has to be a regular one. I'll look it up later. Disney getting whacked here. So I'll keep an eye on that. It's down a lot. It's not a clean climo because these overlapping bars, but it's down a lot. I mean, look at this gap under the green bar. That's when we shorted it. So that was a tier 1 beautiful short. And I remember the day we did that is when DeSantis was going after the CEO for their little spat over some woke bill. It's down a lot from then. Beyond Meat, bottom right, earnings. I say that's a gap and snap candidate because you got fluid moves down far from the 20. Now you're getting your head chopped off with a big gap down. So that's a beautiful candidate. for selling naked puts, 30-minute high, which we did with coin yesterday. Same kind of gap and snap. We sold the 40s. We have some 40s that expire tomorrow and next week. We did 2 different cycles. Brothers here. Where are you? Brothers, big old whacking. That's a gap and snap candidate. Look at the volume yesterday, closing at the low. Now you're gapping down. Coup, I don't know if this had earnings, but I saw it gapping down. And I mean, the devastation. Look at this, $370 stock is now $59. There are just so many examples of carnage. So I'm gonna watch that one too. Cool. U was one yesterday, but it never gave us any stabilization. But look at the volume. These are ones that I'll watch every day. Watch every day for them to stabilize. Wendy's was another one yesterday. Look at that climb-up volume. Still in a downtrend, but I'm going to watch them for a turn. Tapestry is on the gap up list, 28.90, so it's gapping over this red bar. So instead of a gap down and snapping, this one is what we call a bull gap over a red bar. So it's kind of a bear trap. I don't like the fact that it's fluid move up in the morning, but 30-minute high. Yeah, Roger, I know. I said all opens are okay except that one. Yeah, with Bitcoin getting smashed here. Yeah, we were looking at these Bitcoin stocks for a while ago, and they just couldn't make the turn. I remember we were looking multiple times. This one, they're not doing good. And the people, the advocates are still on TV, pounding the table. Girl yesterday, my evaluation models say Bitcoin is 48,000 to 180. And I was thinking to myself, well, if I think that house for sale across the street is worth a third, then I'd be buying them left and right. So that tells me she don't believe her valuation model, or she would say, this is Christmas time. I'm going to mortgage the house and buy this because I believe it's worth 180. So it means she don't believe what she's saying. All right, market must be open. I'm getting some alarms. IYT, Greg, we're in short in the ETF trader.